When I first heard that the government were bringing back 5% deposits, I said to my girlfriend, pack your bags, we're moving out of this one-bedroom flat and buying our dream house with a big old garden. And then reality hit me once again. So this week, Chancellor Rishi Sunak announced his plans for the 2021 budget with two big changes which will impact the housing market. The first one, the extension of the stamp duty holiday. So on any properties worth up to £500,000, there will be no stamp duty tax paid up until the end of June, and then thereafter there will be another 3 months grace period for properties worth up to £250,000 up until October, and then from October the threshold will then return back to normal. The second announcement which came out this week was the return of 95% mortgages. So those who have can afford a 5% deposit are able to get on that property ladder, which I think is really, really positive news. Banks such as HSBC, Santander, NatWest, Barclays have all opted into this government scheme, with more banks to follow suit over the next couple of months. Now, these 95% mortgages are not just available to first-time buyers, they're available to anyone trying to move home, trying to secure a residential mortgage for any property worth up to £600,000. However, if there's any property investors out there thinking that they can take advantage of this scheme and secure a 95% mortgage, unfortunately, that's not going to be the case. You're still going to be looking to secure an investment property for a kind of 75% mortgage, dropping a deposit of around 25%, as this scheme is purely for residential mortgages rather than a buy-to-let mortgage. Also, this scheme is available for all properties available on the market, not just new builds. As we know from other government schemes such as Help to Buy, that scheme is predominantly for new builds. So having this scheme, which is available to all properties available on the market, just opens up the amount of properties that people can buy. Additionally, there is a time frame on this scheme. So if you're out there rubbing your hands together thinking, right, I'm going to put together a 3-year plan to get my deposit up, get on that property ladder, unfortunately, I'm going to have to burst your bubble here, because there is a time period on this scheme and it's valid from April 2021 up until December 2022. So this is a scheme purely to kind of stimulate the market and get us back to a place pre-COVID times in terms of the housing market. So rather than looking at it in terms of a kind of a long-term plan, I don't believe that the government is looking to kind of extend it past December 2022. The government have also announced that this scheme will have a 5-year fixed interest rate rather than a variable rate, which I don't know if it's a good thing or a bad thing at the minute, because interest rates are really, really low. But on the other hand, you know, if you're securing a 95% mortgage with this scheme, you know exactly what your monthly repayments are over the next 5 years. So you can plan and budget accordingly. And I guess it's just easier to manage rather than having that variable interest rate where the payments can fluctuate and go up and down. And lastly, the loan to value is between 95% and 91%. And basically, loan to value means the ratio between your actual mortgage, so the money which you're borrowing from the bank, versus the actual value of the property. So if you purchase a £100,000 property and you have a £95,000 mortgage, you will have a 95% mortgage. So you are able to put down between 5 to 9% deposit, which I think is good. The more money that you can put down, the less obviously you'll be paying on your monthly repayments. So if you can afford to put down more money, great, I recommend you doing so. If you can't, I guess it's still a good option for those who can't afford a bigger mortgage and put down that 5% deposit. So I think on a whole, this scheme is a positive thing. I think having these 95% mortgages available where people can secure these mortgages with a 5% deposit will be a beneficial thing for a lot of people. According to Halifax, last year in 2020, the average first-time buyer deposit was around £57,000. Which has increased 23% since 2019. So I don't know like where these people, these first-time buyers are getting this amount of cash from. They must be having to draw money from the bank of mum and dad or something, but that is a crazy amount of money. And if you consider where I live in London as well, the average first-time buyer deposit increased by 20 grand from 2019 to 2020 to 130 grand. That is absolutely crazy, man. So as I said at the start of the video, when I first saw this news, I was like, yes, this is the break that everyone has been waiting for, including myself. But then I started thinking a little bit more objectively and started doing a little bit more research. And there are a few cons to kind of all these pros. First one being the affordability factor. To secure these 95% mortgages, you're still going to have to go through the traditional credit and affordability checks as you would do to try and secure a 10% residential mortgage, for example. So if your credit score is not doing too well, you might want to kind of look at that and look at ways to try and boost your score. And as I mentioned about affordability as well, you're still only going to be limited to borrowing 4 times your household income. So if you're living in London and you're looking to purchase a property by yourself and you're on a salary of £30,000 per year, the maximum amount that you can lend from a bank is £135,000. And when you add your 5% deposit to that as well, the kind of threshold of properties which you can actually purchase by yourself limits you to properties worth around £141,000. As we know, in London, 141 grand is not going to get you very far at all. I actually did a video on this previously, looking at properties, investment properties in London for 130 grand. I mean, the finish looks quite nice, although it's quite small. Like the kitchen, look at the kitchen, man. That's a sink and a hob. How am I going to cook stewed chicken and rice and peas on that? I don't know. And you can still buy properties in London for 130 grand, but you need to be realistic on what you're going to get in return for your money. And the properties that I kind of research are very kind of small studio apartments, which I wouldn't recommend kind of purchasing to actually live in as a residential home. So in order for this scheme to benefit those living in London, you need to make sure that your combined household income allows you to lend the maximum amount of money that you can, obviously 4.5 times that combined income, to purchase a property in London which is suitable for kind of your needs. As we know, the average house price in London is around £500,000, which is crazy when I say it out loud. But yeah, you just need to make sure that your affordability going into this scheme, you know exactly what you can afford and you're looking at the right type of properties for you within your budget. Also, with these 95% mortgages, it's a scheme implemented by the government to ultimately stimulate the market and encourage people to purchase properties, right? And with that, it's going to increase the amount of first-time buyers entering into the market, which is ultimately going to increase the demand and drive up the prices of these properties in value. So that's great news if you're thinking of selling a property, but if you're looking to buy a property, obviously you're going to be paying more than maybe the property is actually worth. And you could argue as well with the stamp duty holiday, you might save a few £1,000s with stamp duty holiday, but ultimately These buyers know that you're saving money on stamp duty tax. They know that there's an increased demand in properties, so they're going to push the prices up. So you might not actually save as much money as you thought you would in terms of a deposit and stamp duty, and you might actually need more money to actually enter into the market with this new scheme than you perhaps realise. Which brings me on nicely to my final point, where I see that the prices in the housing market going up and up over the next 12 to 18 months while this scheme is in place, as well as obviously the stamp duty holiday. But what's going to happen after that? And there's going to be a dip in the market. The prices are going to be coming down eventually. And people entering into these 95% mortgages may be subject to acquiring negative equity within their property. And negative equity is when the value of the property is actually worth less than the money that you've actually borrowed. So if I purchase a property for 100 grand and I have a 5% deposit with a mortgage of £95,000, and 2 years down the line, that property is now worth 90 grand, I'm actually in negative equity of £5,000. Which is not a good place to be in, and you'll find it very, very difficult to kind of move house or remortgage with obviously that negative equity. You might have to actually pay the difference to the bank if you're in that situation. But alternatively, you could ride that out, wait till house prices to increase in value so that you move out of that negative equity. So it's just something to consider, and a possibility that might happen in the future. And this is why a lot of banks didn't want or remove their 95% mortgages from their product offering. Having a 95% loan to value gives you little kind of buffering space between house prices fluctuating, and there is obviously the possibility of going into negative equity. So as I said, that is a reason why those original mortgage offerings were kind of removed from the market, to eliminate that risk from kind of a financial point of view to these banks. With that being said, history has taught us that over time, house prices over a period of 20 years actually double in value. So I guess if we're looking at it in terms of a long-term living situation, then falling into negative equity in the short term, it's not a big deal in my opinion, as long as we're looking to kind of stay in that property for the long term to benefit from house prices increasing in value, because they are going to increase over time. It's just part of the whole property cycle, which changes and fluctuates over time. So yeah, I hope you found that video useful off the back of the announcement this week. As I said, I think it is a positive thing, bringing back 5% deposits. It's going to help a hell of a lot of people to get on that property ladder, but you just have to kind of consider the affordability factor, what properties you can actually purchase with your household income, and also just being aware of that negative equity. As I mentioned, it's always a possibility that house prices will fall after these schemes in the near future. So just to be aware of, food for thought. Let me know your thoughts in the comment section. If you found this video useful, drop me a like, as I say, drop a comment and share it to someone else who's thinking of taking advantage of this scheme, because I do think it's, like I say, it's a positive thing in the bigger picture. But yeah, thanks for tuning in. Hope you really enjoyed this video and found it useful, and I'll see you again real soon.